Hey traders, it's been a while since I put together one of these trading week reviews, but as many of you know, I've been recently kind of regularly blogging and putting together a trading journal and just talking about kind of my trading process, some of the lessons from each day. And I thought, even though it may be a little bit too much to put videos together for that every single time, I wanted to at least kind of do a summary, do a weekly review, and kind of go over some of that stuff. So this week here was a surprisingly good one, to be honest. I don't usually expect to pull out 20 or more points in the summer. It does not normally happen. As you can tell here, kind of one outlier day really that gave a lot of the profitability, and we'll talk about that. But when it comes to summer trading, it's definitely hit or miss at times. It's not usually going to be quite as consistent as other times of the year, and you can see here too, just in terms of the number of trades, not a ton of trades, but just over 50% wins, which usually I like to be more in that 60, 65, even 70% range ideally, in terms of that hit rate. But doesn't always happen, but you don't necessarily have to win a ton, especially if your reward to risk is pretty strong, right? I could have pretty easily taken a couple more losses, a few more losses, and still had a really good result. And so it is important that you kind of look at trading from an expectancy standpoint. Don't really focus too much on just the win rate or just the reward to risk. You have to look at those things in combination. But starting things off here with the 14th. On Tuesday, there's no Monday just because I don't tend to trade on Mondays. I usually take a long weekend every weekend, so very rarely trade on the Mondays. But things here are a little bit difficult. Managed to grind out a little bit of profit, but to be honest, this was a day that I felt I kind of let myself down a little bit. And so when we talk about the process, really focusing on trading your plan and knowing your edge and being confident in it, letting it play out. This was a day where I kind of got myself a little bit too involved. I had a good break of a nice pattern here, false break trapping some traders here on the 555 tick chart, and then good momentum coming in the other way. Every reason to think that given a little bit of time that we could break lower and head down into the target here, basically 4 points off, and kind of second guess things. Wasn't really getting the reaction I wanted. Things being pretty slow, and so decided to tighten things up and ended up knocking myself out. And that's sometimes there is sort of an advantage in the right situations to doing that and tightening things up if it fits your plan. But this is one where I kind of deviated a little bit, and that's why it is so important that you do kind of stick to those rules, that you stick to that plan, that you stick to that known edge, because it's very easy to kind of get in your own way basically, and talk yourself out of good trades, talk yourself into bad ones. So these are the sort of ones that I really want to go back to at the end of the week. I want to go back to this stuff. I want to really consider, the decisions made. I want to look at this in the context of not just this one setup, this one situation, but if this came up, 20, 40, 100 times, how would it play out over a bigger sample size of trades? What is the best way to, manage that one, right? So a lot of people get tied into the outcome of every individual trade or every individual day, but you have to be looking in that bigger sample size. You have to be thinking of things that way if you're thinking of how an edge will play out. So an important one there, and definitely if you're focusing on the process, I mean, that's a key element. So again, it's not only about the results. I mean, of course, this is a results-driven business that matters. It's everything, right? If you're going to be a trader, but in order to kind of get to those results, you really have to focus on the process first and on the execution and following your plan and sticking to those rules, being disciplined and patient enough to stick to your rules. So, aside from that, here on the Wednesday, this was really the outlier day where things took off. You can see here, basically really early on, a half hour into the market, already had 12.5 points, and that's risking basically 1.25 points max on these trades. So that's a big return just in a half an hour. Could have wrapped things up there, but I usually don't. This is where I kind of got into that idea in the trading journal of really not liking that 2 points per day sort of focus that you often see in the Emini S&P. It used to be 10 pips a day. I used to see when I traded Forex in the start of my career. And I think it's a really limiting belief, like this self-belief that if you just can take out 2 points a day, if you can just take out 10 pips a day, because by limiting yourself and limiting your upside, usually people don't limit their downside quite as much. They might be willing to lose 2 points or 3 or 4 and so now you've got this sort of lopsided situation going on where now there's a lot of pressure on you, right? The outcome of every trade becomes that much more of a pressure situation. And, if you lose a couple early on, well, now it's like you got to dig yourself out of this big hole just to kind of get back to 2 points, but it still doesn't really get you anywhere. So I've always kind of taken that approach that if the market's moving well and there's good opportunities available, I'm just going to keep going after it. And I'm going to try and really take advantage, strike while the iron is hot, basically. And it's really, these outlier days are not necessarily required to be, profitable, consistently profitable. But to get to that sort of elite level profitability, I think most traders that you would talk to, their major focus is on limiting their risk and making sure that, they don't have those outlier days to the downside, right? Making sure that they know what they're willing to risk on a single day, making sure that it's very manageable, keeping the drawdown to a minimum. But they want to keep that upside, open. And it's these outlier days, these ones that are kind of, the keys to the castle in terms of elite level profitability, that if you can really take advantage when the market's moving well, that's what's going to take you to that next level. So it's a difficult thing for a lot of traders. I don't always maximize the potential on, these days. And in fact, as the day went on here, things sort of chopping around, didn't exactly have sort of the best result as it continued in here and bounced around a little bit, right? So ended up giving back some at the end of the day and calling it a day. But that's the thing, is that, I want to keep going because things are going well and I'm trading well and I'm seeing, good results. And so basically with these days, I usually just keep going until the market kind of tells me to stop. I just, and it doesn't really matter if I make 5 points or I make 10 or whatever. I just want to keep, pushing as long as I'm kind of in that zone and as long as the market is offering that potential. So that's the biggest takeaway lesson. Don't really limit yourself when things are moving well. Take advantage, because so often that's what people do, right? They push to do too much when the market's not moving well. When it's range bound, when it's choppy, they try to force things, and then when it is moving well, they talk themselves out of the trades. They think the trend must be coming to an end. They just want to take that 2 or 3 points and just run and call it a day and make sure they bank that, and they totally limit themselves. And so really important lesson on that. This one here for the Thursday, just a straightforward trend. The major thing here is you just got to be patient and you got to wait for it because sometimes it's not that easy to find a chance to get in. Waited basically a whole hour here just sitting on my hands doing nothing. But that's a key element of trading. I mean, there's going to be really active scalpers that are trading dozens of times in a day. But if you want to try and keep your costs low and give yourself a better chance of having an edge that you can really sustain and be consistent with long term, you don't really want to be trading a ton. You don't want to be getting all those commissions and fees and just churning your way through. Ideally, you want to be able to pick your spots, go for those high expectancy opportunities. And so sometimes that does mean just waiting it out and letting things play out. But once you get your move, take your trades. So, worked out pretty well here, pretty straightforward. Maybe limited my potential a little bit on, taking a profit basically at the previous day's high. But not going to be too concerned about that. Dangerous area, things a little bit choppy heading in, and we'll open things up a little bit more later on. So this is one that I can look back on and maybe say, I could have had an extra 3, 4, 5 points. But in these choppy bullish trends, they often do come back multiple times. So I tend not to get quite that greedy with them, I guess, as opposed to looking at the Wednesday, the big drop down, tons of momentum there. I'm really going to open up those targets on those ones. I'm going to look generally for quite a bit more. Now, on Friday here, you see this was a tough day. Got, very choppy environment, not seeing many smooth, high momentum moves in here, things sort of bouncing around. And, it just wasn't one of those days where I was trading particularly well or the market was moving particularly well. So just called it a day and, took a few losses here, but a couple little bit smaller ones. Now, worth mentioning that if I had taken a few losses in here that were full losses, that would have been the end of the day. I wouldn't have had this winning trade, and it wouldn't have mattered. I would have lost, 3.5, 4 points. Not going to be too concerned with that. It's going to happen sometimes. It could have happened here, but that's the important thing we were talking about for the Wednesday. Maximizing that potential. You have to do the other side of that. You have to limit that downside. Make sure that you are keeping a sort of loss limit in place, knowing what that level is, and always sticking to that, never exceeding it. So, hugely important there. So a little bit of a struggle to end the week, but not a big deal. Still ended up being a pretty good one overall, of course. So, it would have been an okay week, even if let's say I had stopped at 2 points a day. Still could have been okay, 5.5 points. There's nothing wrong with that, but clearly there's a big difference between making 5.5 points and making 10 or 15, or in case like this, 20, which again is a bit of a lucky outcome in the sense that usually the summer weeks don't offer that much. We'll probably see if I keep doing these, you'll see future weeks probably a little bit lower, but overall, yeah, good one there. Definitely some good lessons. Very different market environments. So there's different things to take from those different days. So hopefully you guys had a good week trading the Emini S&P 500 yourselves, and I will hopefully see you next week in another review video.